Let's break down the CleanMax Enviro Energy IPO, one of the biggest mainboard IPOs this month at about 3,100 crore rupees. This includes a fresh issue of BN 200 crore and a large offer for sale of 1,900 crore. The price band is 1,000 to 1,053 rupees per share, with a face value of just 1 rupee. Bidding runs from 23rd to 25th February and listing is expected on 2nd March on both BSE and NSE. With 8 lead managers including JP Morgan, Nomura, Axis Capital and HSBC, this is clearly a marquee offering. CleanMax Enviro is India's largest commercial and industrial renewable energy provider, according to CRISIL. As of July 2025, the company manages 2.54 gigawatts of owned and operated renewable energy capacity, with another 2.53 gigawatts under development. They serve 531 customers through over 1,100 power purchase agreements across India, UAE, and Thailand. Their offerings span solar, wind, and hybrid energy solutions, including on-site installations, off-site power supply, and carbon credit services. The fresh issue of 1,200 crore will likely go towards debt repayment and capacity expansion. However, note that 1,900 crore is OFS, meaning existing investors are cashing out significantly. Now the financials. And this is where you need to pay close attention. Revenue has grown well from 961 crore in FY23 to 1,610 crore in FY25. EBITDA has also jumped from 406 crore to over 1,000 crore. But here's the catch. The company was making losses until FY24. It only turned profitable in FY25 with a PAT of just 19 crore on revenue of 1,610 crore. That's a net margin of barely 1.2%. The debt situation is significant. Total borrowings have gone from 3,043 crore to over 10,000 crore, with a debt-to-equity ratio of 2.5 times. The EPS is just 2.88 rupees, which at the upper band of 1,053 gives a staggering PE of about 377 times. RONW is just 1%, so returns on capital are currently very thin. The peer comparison is quite revealing. CleanMax's PE of 377 times is by far the highest in the group. Even NTPC Green at 133 times and Adani Green at 119 times look modest in comparison. ACME Solar and Renew Energy trade at 49 and 45 times respectively. On return on net worth, CleanMax's 1% is the lowest. Adani Green leads at about 13.5%. Now, renewable energy companies do trade at high valuations because of growth expectations, but CleanMax is priced at a steep premium even by sector standards. The company is essentially being valued on its 5 gigawatt capacity pipeline rather than current profits. On strengths, CleanMax is the undisputed leader in India's C&I renewable energy space, backed by CRISIL. Their 5-plus gigawatt capacity pipeline, 531 customers, and presence across India, UAE, and Thailand give them serious scale. They also have top-tier bankers backing this IPO. On the risk side, the company has only just turned profitable, and the PE of 377 times is extremely expensive. Borrowings of over 10,000 crore with a debt-to-equity of 2.5 is concerning. Project execution risks are real in the renewable space. Land acquisition, grid access, and timely approvals can all cause delays. And the large OFS component means existing investors are selling a significant chunk. To sum up, CleanMax is a market leader in a high-growth segment, but the valuation at 377 times earnings leaves very little room for error. If you believe in the long-term C&I renewable energy story in India and are comfortable with the high debt and premium pricing, this could be one for your watch list. But the risk-reward at this price demands careful thought. Do your own research before investing. Thanks for watching.